Earnings season rolls on, and we're looking ahead to results from Salesforce, Kroger, and Cracker Barrel in today's earnings exchange. Our trader today is Quint Tatro, Joule Financial's founder and president. Great to have you along, Quint. Can't wait to hear your thoughts on Cracker Barrel. But let's start with Salesforce, whose shares are up more than 70% this year and on pace for a fifth straight week of gains. Oppenheimer writing enterprise demand is slow but stable. Analysts want AI monetization strategies and sales growth following various price hikes. It's expensive, you say, but you're still a buyer?
Yeah, Kelly, first of all, thanks for having me. It's great to be back. Analysts want that. And I think investors want that. And what that is that top line growth. So, it's not a cheap stock. It's trading 24 times forward. EPS projections are for a growth rate of about 16%. The whisper number today is $2.12 on about $8.7 billion in revenue. But make no mistake, what we want to do is we want to see a blowout of that revenue number. And we want to hear that it's coming from basically their AI suite of products, their cloud-based, their AI chat, those sort of, tactics. We want to see that pay off, maybe their acquisitions, et cetera. If we get that, I think the investors will certainly take the shares higher. But the Benioff's already done a great job of cutting costs. And so I anticipate we're going to see a strong bottom in the EPS number. But if we get that strong top line, I think this has an opportunity to head back to all-time highs here.
Wow. I mean, the EPS, the forward multiple is only around 26. So it's, I've seen worse. I feel the ghost of Munger stalking me as I say that. But still, it's not, incredibly overvalued here. Salesforce CEO Mark Benioff will join Cramer tonight on Mad Money to talk about those results around 6 p.m. Eastern. We look forward to that. Let's move along to Kroger because the shares hit a 2-year low just a couple weeks ago. And they're only 3% above that level right now. Evercore is talking about consumer strength, food prices, maybe some progress in Albertsons could eventually result in 25 to 35% earnings accretion. But Quint, why has this been such a tough stock? What would you do with it?
Yeah, it's been a tough stock because this is traditionally a very low margin business. And when you see input prices increase like we have over the last several years, those profits are squeezed and it's hard to pay a high multiple for something like this. This is not normally a stock that we would be attracted to, but I am attracted to this stock. And make no mistake, it's also because I have 3 growing teenage boys in the house and we're at Kroger almost every day. So it's nice to own, what you pay for or what you spend money on. But nonetheless, whisper number here, 94 cents. It's still not cheap. It's 10 multiple, trading and low single digit growth. But our view here is as we see inflationary pressures and input prices come down, I do not think that's going to translate to lower, grocery prices, which means we should see margin expansion and we could ultimately see profits increase. And that would be a new cycle for a company like this. Also, make no mistake, I think we're going to hear good things about the generic brands, specifically Simple Truth. As consumers change their buying habits, I think that we're going to see a lot of movement there, which also has higher margins. And Kroger's also a data company. I mean, they have 8451 in Cincinnati. They're doing a lot of incredible things on data analytics, which also I think is going to boost profits in the future. So I'm a buyer of Kroger down here.
They need to get you an investor day. I haven't heard this much enthusiasm. How many gallons of milk are you guys going through a week now? We're on like 4.
A lot. Yeah. A lot. A couple of gallons of milk, lots of meat, lots of eggs. Right. It's across the street from us, so we're there regularly.
There you go. All right, let's move on to Cracker Barrel, which is up 12% in November, but still down about 20% this year. UBS is watching customer traffic amid some macro weakness concerns on sales and margins. They're saying the chain's loyalty program and promotions might be necessary to keep tables full during a downturn. You a buyer of this one?
I'm not, but I'm going to tell you, I don't think anybody from Wall Street is going to a Cracker Barrel, because if they were, they would see that they are packed. Yeah. I'm in central Kentucky. They're always packed, but it doesn't matter. This is a company that fundamentally is in some trouble here. I mean, their debt to equity ratio is quite high, very heavy debt load, and only $25 million in cash. But Kelly, even if they turn these things around, they're paying out 95% of their earnings in their dividend, which, on the surface looks great. Oh, look at that dividend. But This is a dividend trap. This is a value trap, in our opinion. And any strength here, especially the last little movement we've seen, I would use as an opportunity to sell this name. I would not be in Cracker Barrel here.
I didn't know it was almost a 7% on that dividend yield. So a note of caution for others who might be enticed. Quint, we'll leave it there. Thanks so much.
Biscuits. Yeah. Great biscuits they have, for
and
sure.
And fun toy. My parents just brought back some toys for the kids from there.
Yes.
Always busy.
Can't beat the checkers. That's right.
Quint Tatro of Joule Financial. We appreciate it.